Well, the stock of Ujjivan Small Finance Bank is clearly under pressure, with the stock down over 2% in trade, as Ujjivan Small Finance Bank did report a loss of 233 crore during the quarter. This was on account of the operating performance coming under pressure and the bank making high provisions during the current quarter on account of the COVID second wave. We did see a substantial rise in terms of the gross NPAs, with the GNPA ratio going as high as 9.8% versus 7.1% in the previous quarter. However, there has been some marginal improvement in terms of the net NPAs on account of higher provisions. Net NPA did improve slightly to 2.7% versus a 2.9% in the previous quarter, and the provision coverage ratio stands at 75%. The total restructured loan book stands at 5.5%. And management also stated that in Q1 the restructuring has been done at nearly around 70 crore under resolution framework 2. If you look at the margins were also stable at nearly around 8%, but there is clearly good amount of stress coming in for Ujjivan Small Finance Bank, as nearly over 60% of the book itself is towards the microfinance sector, which has clearly come under pressure. In an exclusive conversation with ET Now, Nitin Chugh, who is the MD and CEO of Ujjivan Small Finance Bank, stated that the banks did see stress on account of the COVID second wave, because of which they did make accelerated provisions to the tune of nearly around 250 crore, which led to losses. He also stated that they expect the impact of the COVID second wave to even continue in the current quarter, which is Q2 FY22. And although collection efficiency has improved in the month of July at 93% and the business is recovering, there has been some amount of losses to the livelihoods of the MFI customers, and customers had been holding back on their cash, and there were also mobility restrictions on account of the COVID second wave, and all these factors led them to report high NPAs. He stated that they do expect recovery could be a lot faster and quicker if at all there is no third wave. However, despite the business recovering, they plan to go ahead and recalibrate on the growth front, and they will take a measured call in terms of granting credit, because although the demand is certainly there for the customers that they are addressing, they really need to go ahead and ascertain at what level the customers will really come back and pay. In terms of the timelines of the reverse merger, Mr. Chugh stated that the RBI has allowed to apply for the reverse merger of the holding company with Ujjivan Small Finance Bank, and the process is likely to be completed over the next 12 months. The aspiration to become a universal bank is certainly there. However, the first priority, of course, would be to complete the reverse merger, as they are preparing towards becoming a universal bank and building capabilities.